Recording. All right. All right, welcome to a casual Forex Killers update. We're going to do a bit of a Discord live here. We've got a couple of people in, and I'm going to cover BTC, SP, DXY, and that might be about it. We'll see how we go. All right, BTC, I wanted to just go over this on a high time frame, and then feel free to jump in whenever you want and ask questions. But I just wanted to sort of show on a high time frame what we're sort of looking at. My computer is lagging a bit, which is bad timing. Hopefully it speeds up. So for me, with BTC, the market is just all about supply and demand. I mean, all markets work on supply and demand, also known as support and resistance, but supply and demand is a bit more of a zone compared to your sort of support and resistance. And I might start back here because I want to show just previously where this supply and demand has proven to be a useful tool and basically controls your market. So here we have that all-time high, very bullish, and everyone's euphoric. And basically, once we came down off the top, most people were just buying the pullback. We're going to the moon, etc. 250k. Put in a bunch of wicks through here. Came up in 3 waves and then sold off. And you see immediately after we sold off, you come back retesting those wicks, i.e. that supply zone, for those people that were trapped and wanted to get out, and then it just sold off some more. Came back up again, tagged that same supply zone, too much supply, too many people want to sell, and came down. Put in this, descending triangle, and a lot of people thought this was accumulation for upside. Ended up being redistribution, and then we dropped out of it. This was our accumulation zone here, right? Broke out of that. I mean, obviously this is the summer of the summer. That's our winter, but the US summer, 2019, and you see just once again we came back up straight into that supply zone again, and there's also like the monthly closes. Closed back here and subsequently sold off. So just to illustrating how it works, there was still too much supply, too many people that had held through all this and just wanted to get rid of their BTC, and that includes investment firms and banks and etc. Not just retail. So then we had this, and many people calling it for a correction, this and that. Another sort of descending triangle. You could call it a symmetrical triangle, whatever. And once again, we dropped out of that. It looked like we were going to. I mean, I don't know how long you've been around, Mark, but a lot of people thinking that was it. We weren't going to get the retest, and then we had this insane pump, which was wild. What was that? I still remember that to the day in the Discord, 40% pump. So that's a 40% pump, hit supply, and then sold off. Once again, we came up, SFP, swing failure pattern, we couldn't take out that top, hit supply again, too much supply, sold off. And then obviously we had that COVID dump, so the COVID dump, put a spanner in the works, alters the market beyond sort of comprehension and then what you can sort of think's going to happen. But where did we come down to? We came down to demand. So all the demand that was through here, all the people that wanted to buy, that didn't buy and waited, once it came back down to there, many buy orders, and I remember that as well, and how that shot up once it hit that target. There was a big gap down there, a big liquidity gap through here on this candle. So there's a big liquidity gap there. and that was taken as well. So you sort of see what I'm referring to if you're following along, and if you've known the charts and you sort of have a fair idea. So tag that, and then it was off to the races. Same sort of deal, right? We've got a lot of price action through here. Excuse me, a lot of volume, trading volume in that sort of range, and we broke out, right? Came back, retested that demand for all those traders and all those firms and hedge funds and all that wanted to buy. Got back in here after tagging that demand, and then off we go. So you sort of see how it works. It's pretty clear cut. If you know what you're looking for. Right. There's obviously all this on the smaller time frames as well, but I'm not covering that at the moment. So again here, bit of I haven't got it drawn here, but a bit of demand here. Obviously came down. This is where Jim and I were both very bullish, especially through this section here. Many people calling, Bitcoin dead, Bitcoin's going down, or whatever it was. I just remember that Jim and I were both bullish, and I remember saying, if Jim and I both say it's going one way, it's almost definitely going that way. When we're split, well, take your pick, I guess. But that went up, putting the new all-time high. SFP, you call it a flat, whatever you want to call it, up in 3 waves, and then we've been in the bear market ever since until maybe not now, maybe. So that's what I'll get into now. And you see, the market as it came down once again. So through all here, all this demand in here, and then you get that move up. It obviously wasn't enough, right? So the demand wasn't enough, came up, came down, it came up, failed there. That was the 45. People thought it was going back up. We had a bad weekly close, and that's when I called Bitcoin going down further. Back in the day, it was a while ago now, wasn't it? So after we sort of fell through that, my next buy zone was down at the all-time high retest. So came down again, demand in here. Demand in here, right? So we had that action here, wasn't enough, sold off. All right, then we just was obviously in that bear market, that bearish downtrend, and then we've put in a lot of price action through here. We had that range going. All right, we broke out at the bottom of the range. Pumped back up through it. See, a bit of a spring. Took out the top of August, which I said was your first sell. Got the sell. This came down. I'll go to the daily because it tagged the 200 daily moving average perfectly there. So, that coupled with, your Elliott wave or whatever else you're looking at to give you an edge, could have given you an entry. So, like I said, I'm long, spot long, but I am looking at this now as taking my profit, and that is because we are in this supply zone. So let's load here. So yeah, once again, it's just that simple. Obviously, going over the other stuff, we're just in the same situation, but we just don't know the future now, right? So, I don't use Elliott wave much like I used to because Forex is it's not it doesn't care about counts. It's all about liquidity and market maker setup. So they use Elliott wave against traders. So I sort of have a mixed sort of view on Elliott wave and sort of treat it with the way that market makers treat it, which is the way to go, obviously, against market makers, to trade with them and not get stopped out by them, just to know their footprints. They can't hide their footprints, because the reason they can't hide their footprints, you say, oh, what, traders will learn, but traders don't learn. Traders never learn, because, as you probably have heard, most traders, lose 90% of their money in 90 days or whatever it is, and then most traders don't last longer than 2 years. And if you're not in it for 2 years, like, it takes you that long to start to recognise, because the first year you just, you're half winging it, or you're getting some great winning streaks, then you're losing a whole bunch, and then you're getting great winning streaks, you're losing a bunch, and then you realise, all right, I've got to learn technical analysis, I've got to do my due diligence, and then you're learning that for a year, and so a year and a half in, you're learning all the technical moves, and then you begin to realise, well, they kind of work, but why am I always getting stopped out? Well, that's because the market makers are stopping you out. And then if you persist, you'll eventually learn how they stop you out and why you're getting stopped out, and how to trade with them rather than against them. But most don't, right? Most don't learn that. They quit, and a new flock of traders come through, as they always are, and the market makers can just keep doing the same thing over and over again. So me, being trading for 4 years now, over 4 years, has learned all this, and doing well. So it just takes persistence. If you want to learn the game, you can certainly make your way and be successful. I think my wife has just come home. Give me a sec, guys. All right, I'm back. Sorry about that. Where was I? Yeah, so once you learn that, you can really be profitable, which is obviously the goal. All right, so yeah, what am I looking at? I'm looking at basically we're trading above the 200 weekly moving average for the first time. If we go to Bitstamp, probably got some old TO on here. It's got a longer history, so yeah, we stayed above that. Always been trading above it, and because of the history, it was the first time we went below it. We rejected off that twice. Well, rather just on this, failed here, and then rejected, and now we've burst through. So I just wanted to show that on that higher time frame. It's pretty much the same area here on the Binance chart, which is where I've got all my TA. But yeah, looking at basically getting into here and offloading my BTC. I will offload most of it, and if we come basically when we're coming down, I'm looking to see what we do on that 200 weekly, right? So that'll be my first point of checking that Elliott wave to get an edge and to see where we can get in. I'll have a look at that and see if it couples with some other TA, and if we're looking good and things in the world are looking up for BTC, then I'll go for it. But BTC, as far as sort of the decoupling from the S&P, like people keep going on about, have been going on about for as long as I can remember, it just hasn't proven true. I don't think it ever will. It's not really a store of value. It's kind of it's not like sort of gold. It dumps hard, and it dumped harder than the stocks. So yeah, if the S&P is going down, then I think BTC is going down. But yeah, basically I'm looking at that. three wave. You can have a flat here, and then get that sell off. If we keep bumping, which is possible, obviously we get through it, then I'll reassess and go from there. And we'll look for higher targets up in this supply zone. But first thing we got to do, if you're looking for long-term buys and long-term holds, is we have to get through this level. So buying here as a long-term swing. Obviously you can buy inside on smaller trades and all that. But I'm not going to be adding to my position here. I'll be looking to see what it does, and if I see the rejections that I want to see, and things going on in the world and the stock market, then I'll be offloading, and then looking to come down here to that monthly support, and that all this big demand zone through here, and there's some volume gaps there as well, which I haven't got on the chart, and I'm not going to get them up. All right, I'll go to the S&P. You still all right? Yeah, righto. Well, I don't know. Well, we'll see how it goes. Can't change it now. All right. So here's the S&P. Been tracking this one pretty well. Getting some good trades on it. And it's basically, again, similar, or very similar, in terms of this high time frame setups. So right now, what I'm looking at is, we had this rounded bottom here on the smaller time frames, and if you know, that was back. I didn't have my Discord going then, but in the Gym of All Trades Discord, we had that. We longed that up and to around 41.20. I sold as soon as it took the top, and then we shorted down various times in various trades. Most notably, probably the 40.63 entry on this wick here, all the way down to these levels at 38.80 kind of thing. So what I'm looking at on the S&P is this bump and run. So again, this depends on the FOMC, right? If we get a big basis point rise, I think this is going to dump. But if not, then we can look for the pump. We've broken the 3-day trend, retested it. So that was for the 40.63 entry sell. We sold that down, and then looking for entries long. Again, it came back into. I just changed. Here we go. It's really lagging. Sorry about this. Not sure why. But yeah, we just came back. So again, this was evident here that we were going to get. You see on the RSI, the 12-hour here, we had the bump and run from this trend, and we also held the bottom trend line, and it was right on the fulcrum of those two. And so that was the long that up. We also tagged, I think that was the start. No, that was, yeah. So that's a bullish trend, but that was once we held that, we could draw that trend line. So rode that one up, and obviously through trading in that range, a lot of demand, right? So gone up, had the swing failure pattern in the supply zone, came down, bearishly retested with 40.63. Again, supply in here, along with another trading style, which I won't really go over, but another trading style I have, which if you watch my videos you know about. We had an expansion line here at 40.63, and so that was the entry short. Again, another one in here, another entry short, rode that down. And now we've got that bump and run, right? So this is that descending trend line on the bearish market, so from all the tops. And it was confluent with this demand zone. And, a lot of messing around down here, but, we've started to climb. I'm short. I got short at the top here, but I'll probably exit that before FOMC because, again, depending on what FOMC does, this could just rocket straight up, and you don't want to be in a short when that happens. Likewise, it could dump straight down, which will be a bummer missing that, but it's not worth the risk. And when I say it could rocket up, I mean that it can jump, and it doesn't matter where your stop loss is. It does not matter where your stop loss is when the candle, goes like this. in 3 seconds, you get stopped out right up here, even if your stop's right above that. So yeah, it's a good spot. We're right on the brink of it's make or break really. So we bearishly retested that bullish trend that we broke through. Again with that 40.63 short, and now we've got this level here. Long term, if we stay above 39.70, that is that's my 12-hour EL. So 39.70 is longs, and if we break that, then sell off. Again, dependent on that rate. That it's not going to go straight down. We'll have a decent move down, but we will obviously put in corrections and different things, and we'll just trade it wave by wave as usual. But yeah, breaking the 3-day there, which is bearish. But conversely, the weekly we have held the trend. So the weekly, you see how this weekly downtrend, we broke that and we got that big move up. All right, and then we developed this trend, this descending trend line. Tagged it here, held it. Tagged it here, held it. And now we've had, 2 weeks. We're on our second weekly candle. It closes this week, holding that trend line. So again, if we're good in terms, if we're dovish on the FOMC, then looking for this to do a move up here like this. That's what I'll be expecting. But I don't think it's the bull run. I think as my drawings show there, my squiggles, we get something like this, and I think we come back down to this range, to this demand, before going up. That's how I see the S&P. Finish on DXY. So DXY, we're going to the monthly. Let me get rid of this. Yeah, so here, we're trading this big range, and you see what's going on. I mean, we've even got a fractal I'll show you on the lower time frames, but we're retesting this range, right? And so this range is demand, but it's very big. It's a very big range, right? So that's the trouble with we tapped into it, caught the bottom to the tick in my Discord, and have wrote it up and had some great trades. You see here again on the monthly, we got that bullish retest on the trend line, and again if the FOMC is hawkish, then I can see this continuing up, right? We tag that, we go up. Now, we can obviously go up and roll over, but that's what the move I'll be looking for, is to go up and then come down, and eventually come down to here, and even down to this area here, which is that demand zone. So if we get down there, and obviously this is a big time frame, but I'm just showing you that it's applicable on all time frames, and it's something to consider when you're trading. So it's an easy way to not get caught on the wrong side of trades. Although it really does depend on what time frame you're trading, right? Can't be taking longs based on this, because you'll be long stopped out before it goes the way you want, potentially. Weekly trend broken off that top, big hidden bullish divergence here on the weekly. So yeah, looking for it to go up. We got that liquidity grab, and we have traded some great moves due to this, and yeah, just looking to see where they're headed next. But we'll keep tracking it, and we'll keep watching. I do want to show that, I think it was the monthly. So just this sort of fractal, you sort of get this move up here. You get this three-wave correction, a break up, and then we come down to retest that level. Now, if we go down to, say, the 8 hour, alright, lagging so slow. We get this move up, correction, break the top, come down, retest that level, right? And then we get another move up, and then this again, another move up. So there's this small time frame bring us a fractal for the larger time frame. Obviously, trading this and looking at the larger TF, you can look at that as, when it was back here, retesting that range and going up. So, but is that now the next move on DXY? Taking it back to the monthly, right? That being that next move, and we're coming back down, right? Like that. Okay, and then eventually back down to here. And if we go back down to that 8 hour, right? So monthly, that's that range. Came back, retested, move up move, and then back down, all the way back down into that big monthly range that we were looking at. Take out the low, and then go up. So yeah, you just see that that's just, factors are just the market repeating itself. Same moves, different time frames, or even the same time frame at different periods. But they're just the market making moves, and obviously like just human emotion. To do correct technical analysis, you need to consider all market participants. So, your retail, your mum and pop, your hedge funds, countries using their money, investing, and market makers and all that. So all participants is what I look at, and it works a treat. So yeah, if you look at that and we get that move down, I mean, this is going to be tagged. This is going to be tagged at some point. So, bullish, hawkish sort of FOMC, expecting move up here before downside to here, and then we go up. Right, and if we get a dovish FOMC, then expecting a straight move down, and it might mess around for a bit and then go up. Anyway, that's what I'm looking at. So you trade your pairs accordingly, and BTC accordingly, I guess. I'm going to wrap up the video there. Look, I'm going to post this on YouTube, so look, take that pipe wrench and obliterate that like button, and share this video if you enjoyed it or you learned something. Like and comment. Thank you very much.